Atlanta's apartment market, a national underperformer for so long as we were coming out of the recession, showed some real life in the last half of 2013. So the question is, has that momentum continued in the first few months of 2014? We'll be exploring that today on Apartment Market Dynamics from MPF Research. I'm Greg Willett, subbing in today for Jay Parsons, who is on vacation. Looking at Atlanta, let's start with the story on the economy, and it's been slow to get back to full recovery, and even at this point, we're about 2% below the pre-recession job high, but the numbers of late have come in pretty strong. As of March, the Bureau of Labor Statistics was reporting annual growth at 51,500 jobs, translating to 2.2% expansion. That's enough economic growth to stimulate some new household formation and housing demand, and the rental sector is getting a big chunk of that housing demand. So looking at the absorption numbers, Atlanta had demand for 9,101 apartments during the year-ending first quarter. That's the third biggest tally nationally, behind demand for about 15,400 units in Houston and some 12,300 units in Dallas, with that demand well outpacing completions that totaled 5,936 units in the year-ending 1Q. Occupancy has climbed about 100 basis points over the past year and is now at 92.5%. Something to point out here that's a little bit different in Atlanta compared to most metros across the country is there's some really solid demand for middle market product. Now, in most places, all the demand is showing up at the top tier product with the new supply coming online, and that really reflects the middle market has been full in most places for a while. In Atlanta, again, we're getting some good demand for that middle market product where occupancy has now come up quite a bit. If you look specifically at that 1980s generation product, which comprises a pretty good chunk of Atlanta's total inventory, occupancy now is up to 93.1%. That compares to 92.4% a year ago and just 88% back whenever the performance for that segment bottomed back in early 1999. Strong demand and improving occupancy in Atlanta are triggering some pretty healthy rent growth numbers at this point. Digging into the results, effective rents for new leases are up 4.3% on an annual basis. The numbers are really strong in that middle market product that I was talking about, topping 5%. If you look at the very top end product, the number is 3.4%, so a little bit lower, but those are still pretty healthy numbers as well. Looking ahead, what we see in Atlanta, there are a couple of question marks on how this metro is going to perform. One of those questions is what's going to happen with that bottom in stock. Now, I was talking about improvement in the middle market, but the conditions are really still pretty weak in that Class C product. Occupancy is actually below 90% in that product segment and really isn't showing too much momentum. The other key question for Atlanta is what will happen with construction. Obviously, this is a market that when the economy gets going, the building activity tends to get going pretty significantly as well. Now, right now, we have limited construction by the Metro's historical standards, 8,647 units on the way, only about 2% inventory growth over the next 18 months or so. Again, certainly the Metro can handle that level of activity, but the question is how much is that going to ramp up and how quickly is that going to ramp up? So something to watch there. Summarizing what we're seeing in the Atlanta apartment market, we do think that this one actually is going to be a really strong performer by national standards over the next 18 months or so. Before construction activity really gets going in a big way. There's still room for occupancy to go up. We do think over the course of the next year, you get an increase of about 100 basis points in the Metro's occupancy rate. And at the same time, rent growth at that 3.5% 3.5 to 4% level. So overall revenue change close to 5% in this marketplace, which would rank among the best performances we expect across the nation. So there's the Atlanta story for you right now. Thanks for watching Apartment Market Dynamics from NPF Research.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.